What's going on, everyone? We're going to take a look at Apple's daily chart intraday today. It's currently 9:42 Pacific Standard Time here. So what I kind of want to point out, yes, we're getting a little bit of a relief bounce on some stocks, right? But a lot of stocks are very, very disconnected. For as good as a day that Microsoft and Apple are having, Amazon started off the day down 60, 70 points. The semiconductor stocks are having a very, very hard time taking out their opening range highs. So with that being said, there's a big disconnect going on. Yes, the Nasdaq 100 is up 165 points on the day session, but I want to point out something on the triple Qs. We're still below the 5 and the 10-day moving average. It's until we close over the 5 and 10-day moving average that we do have room to push, which is going to be the next area of opportunity for a continued dead cat bounce. Right now, things are very, very choppy. A lot of things are going up, they're going back down, going back up, going back down. With the exception of Microsoft really and Apple that have kind of reclaimed some macro levels of supply here that we're going to talk about. Like, for example, Apple has reclaimed the 5-day moving average. Now, does that mean that the bottom is in on Apple? Does that mean that Apple's going back to all-time highs? No. If you take a look at my chart, look at all of these lines, all of these different color lines that you see on my chart, right? Going all the way up to $172 on Apple. Those are all levels of supply, all levels where there's sellers going to be sitting, all levels where Apple stock can get extremely choppy. What this is a nice little relief bounce off of some lows here. 132 lows. We had a nice little bounce on Friday into the close. We got a continued bounce on Apple to start the day. What I want to kind of point out here, something to kind of take in mind. If you're currently sitting in this Apple trade here today, I hope you take some profits. Obviously, you're going to want to leave a runner. We're coming into another level of rejection here at the 10-day moving average. Now, the bigger trade for everyone not in Apple is going to be a close or a break of the 10-day moving average. That price is going to be sitting between 144.26 and all the way up to 150. This is the trade you want to be long in, right? This candle today is like basically proving to you that we're going to have a little bit of a turnaround for a short-term bottom here. Does that mean that this is the bottom, like this is the last bottom and Apple's just going to go all the way back up to 170, 180, 200? No. What that means is we can get a bounce here. Look at the big extended leg that we have here, right? If we just kind of go back 2 months and we look at the big extended leg that we've had just in the last 2 months, if these are our highs and this is our big leg down here, all this is a little bit of a relief bounce. Now, we had one of these 3-day relief bounces here, and it was rejected at the 50-day moving average to leg down again. So with that being said, if we do get over the 5-day moving average, we will have room into 150, and then from 150 to 155. I think this could be the next lower high, right? If we do get a continued bounce, but this will also present a lot of trading opportunities to the long side, whether this bounce lasts a couple of days or a couple of weeks. But if we get into this zone, I would definitely be cautious as we're still under the 200-day moving average and the 50-day moving average here. So we could get rejected. We could chop around here and then we could start to fade back down. And if and when we ever test these lows again and Apple loses those lows, that is your macro flush point there through that 132 zone. So just keep in mind, don't get anxious. You didn't miss out on any trade. You didn't miss the bottom here. You're going to get another back test. You're going to get another opportunity. And I think the bigger trade is actually to reclaim that 10-day moving average with the push into the 20. This is where you can have a potential to make a lot of money on that trade. So just kind of let Apple do its thing, guys. It's a fantastic trade for everyone who caught it today, but don't feel like you missed the boat on the move. The train's not going 1,000 miles an hour here. We still have a lot of work to do in the market as a whole before things to look really, really good. Just to be completely honest, Apple really doesn't look good until it gets over $172. That is what it is. Everything in between is just day trades, scalps, take money where you can take money, try to go with the day's trend. Even in a bear market, you're going to get green days. Even in a bear market, you're going to get a big pop. Even in a bear market, you're going to get 2-3 days, even 1 week, 2-week relief bounces. That doesn't mean that the selling pressure is over. We really can't say that until we start to reclaim the 200-day moving average, the 50-day moving average, and now we're on a different kind of storyline, but the storyline is still bear market. The storyline is still sellers are in control, and the storyline is still we get rejected at upper supply zones. If we kind of just look at the last time we tested the 10-day moving average, we had a 3-day sell-off. Okay, if we take a look at the time before that, we tested the 10-day moving average, we had a 4-day sell-off. Okay, so just kind of keep that in mind. The last time we reclaimed the 10-day moving average, we had one big pop and then a sell-off. This was also on a Fed day that Jerome Powell is talking. So keep that in mind as well. The last time we reclaimed the 10-day moving average, we spiked up and then we had a 4-day sell-off. So, if Apple confirms a 10-day moving average, we could have a nice pop and then a sell-off. If Apple comes into the 10-day moving average, it could just test and then have a sell-off. So it's really not going to be until we start building over this 10-day moving average, reclaiming the 20-day moving average, where we can kind of say, okay, now we can take a step back. We got a little bit of relief. Let's look at the upper levels of supply. But as of right now, it's all about baby steps, and it's all about seeing what the market is going to do on a day-to-day, intraday kind of outlook. If we close over the 5-day moving average today, which if the market was to close now, Apple would be closing over the 5-day moving average. That's all that's telling you is we got room to the 10-day. The 10-day is right there, right above, just a couple dollars away. A point and a half or whatever. Let's see the exact price. 10-day moving average right now is sitting at 144. So we got about $2, right? All it's telling you today, if Apple closes over the 5-day moving average, is we got possible $2 worth of room tomorrow. Does that mean we're going back to 150? No, it means we have $2 going into tomorrow. If you're a trader, you're only looking at what the stock can do for that day. We don't care about what it's going to do next week. We're not trying to predict when it's coming back. We're not trying to predict when it's going to lose the lows. We only care about what the hell the stock's going to do the next day. Now, if we somehow in the last, couple of hours here in the trading session, if Apple gives up the 5-day moving average, this is bearish. Not only did we confirm the 5-day, but if we lose it, that can tell you that all this was just a minor pop for more downward selling. So also keep that in mind. I hope this video helps. Make sure to subscribe to the YouTube channel. Also join my Discord. I'll see you guys on the next one.